Hey guys, welcome back to another edition of the Entrepreneur Hour. Today's topic is Vanguard 2021 predictions post-COVID top takeaways. If you know me, I'm very passionate about investing. I'm very passionate about Vanguard and the things that they're doing over there. It's one of my favorite brokerages to invest with, and I've shared that in some of my previous videos. But they did a really good webinar back in January, and I wanted to share some of the top takeaways. So let's go ahead and get into it. First, if this is your first time to the Entrepreneur Hour, welcome. This is a place where we educate, influence, and empower. Um, on this YouTube channel, I will share everything I've learned over my 20+ year journey in being an active practitioner in personal development, business, entrepreneurship, small business, technology, marketing, personal finance, money management, investing, and real estate. I was able to bootstrap my way through business school, and I look forward to sharing with you the many lessons learned in the trenches. So hopefully you don't make the same mistakes I made. Focus on progress, not perfection. I look forward to hearing about your next success story. So before I get into the top 5 takeaways, I want to show you real quickly. I will link in the description below a link to the full 1 hour long uh, Vanguard CEO Tim Buckley and Chief Investment Officer Greg Davis being interviewed by the moderator. And it's about an hour long, but I put together the top takeaways for you guys. So hopefully we can get through this in about 10 minutes or less. So let's go ahead and jump back into it. So the top 5 takeaways from the Vanguard 2021 predictions webinar. Number 1, portfolio positioning. Number 2, political and health factors, some of the turbulence that had been happening politically. Number 3, crypto markets. Number 4, portfolio and asset allocation. And number 5, long-term benefits of compounding. So again, obviously the COVID-19 impact in 2020 was huge. It was an election year as well, so that was another factor to consider. And then you had the insurrection at the Capitol that happened on January 6th, which was pretty crazy. So obviously you have those factors. Um, what can you do? How to position your portfolio after COVID? Well, some 3 key items they mentioned: diversification, rebalancing of your portfolio, and obviously keeping costs low. It's all about staying the course, right, guys? It's all about long-term sustained growth, and so staying the course really important. 99% of Vanguard customers did this during 2021, so that's huge. 3 concerns they had obviously is the geopolitical concerns, the slow vaccine rollouts, and market valuations. And then obviously you had the U.S. and China relations concern. A lot going on there. Once herd immunity kicks in, the vaccines roll out, people start to go out and about, then we can hopefully see recovery in Q4 of 2021. During economic during current economic recovery, markets have been going gangbusters. Yeah, absolutely. Timing is everything. And shockingly, though, throughout the pandemic of 2020, the stock market set record levels, guys, record levels. That's a key takeaway. Um, I know myself personally, portfolio increased significantly. Incredible timing for the vaccine, speed of innovation, very quickly compared to previous rollouts. And you had the SARS, Ebola, etc. In past years. Cryptocurrency, obviously Bitcoin, Vanguard considers it very speculative investment. Intrinsic value consideration must be obviously considered. Underlying cash flow is key in companies. On the bright side, though, it is technology backed by blockchain. Obviously, numerous uses and cases for these scenarios, even recently with Tesla buying over $1 billion worth of Bitcoin and saying that they will start accepting it. That's huge when you get mainstream acceptance, and keeping an eye on the key players. It can be very volatile, though, triggered by fear and scarcity, but could be considered for diversification. Doesn't pass the Vanguard test, the sniff test. Concerns around inflation, hedging out this risk. Equity markets are usually a good hedge for long term. And be aware of risk tolerance. What is your risk tolerance? All right, so next items, portfolio and asset allocation, diversifiers, consider returns. A quick tip here, don't be so obsessed with yield. Consider total return and creating stability and income streams with systematic withdrawals, which are tax optimized income for the future. Don't speculate with your retirement. US versus international investments. I just sold some of my international investments that weren't performing. So I readjusted my portfolio a bit. Cut down on your expenses. Again, Vanguard, one of the lowest expenses when it comes to fees. That's why I really like it. Never forget long-term benefits of compounding. The magic of compounding as a refresher. The more frequently your money earns interest, the faster and bigger your balance will grow. As interest is added to your account, you earn interest on the original balance plus the previously earned interest. The final return on your money is called an annual percentage yield, or APY. And if you're not subscribed to this channel, make sure you hit the like button and subscribe to this channel. Really appreciate it. The more you can save earlier, the better, especially at early ages like 30s to 40s. Dollar cost averaging is an investment strategy in which an investor divides up the total amount to be invested across periodic purchases of target assets in an effort to reduce the impact of volatility on the overall purchase. No one knew the market was going to take off after March. Um, Unless you were paying attention to, like, for example, myself, I was really looking at other key indicators like the economy, some things, key initiatives that were happening politically, looking at the Federal Reserve, interest rates. You have to look at unemployment rates and numbers, a lot of other factors to keep in mind, and obviously looking at the funds that you're investing in the companies and looking at the performances quarter over quarter, really important. So I was fortunate to be able to tap into that. ETFs versus mutual funds, long-term benefits, tax efficiencies, use limit orders on your purchases. And then Vanguard 2021 virtual model has been accelerated. A record year of clients, logons, and investing 1 billion into their website, their mobile app, etc. So it's progressively getting better. I wouldn't say it's like a 10 out of 10, but I'd say it's more like around a 7 right now, in my opinion. Just to share with you a quick asset classes breakdown here for myself. I use 20% stocks, 30% real estate, 10% Roth IRA, 10% mutual funds, 10% 401k, 5% Bitcoin, crypto, and 15% I always have in savings. So hope you guys found this top takeaways helpful. Again, this was the top 5 takeaways from the Vanguard 2021 predictions webinar. I hope you guys enjoyed this. Be sure to like, subscribe, and share this video. I would really appreciate it. And we'll see you on the next video. Thank you.